So welcome everyone, thanks for coming. To me this is a fascinating subject and incredible panellists tonight. I'm very honoured to have them because it has been an incredibly amazing year in the crypto world. One of the biggest I've ever seen since it started in 2008, so it was a bit overwhelming there. So it's really interesting to hear from experts what their view is on the situation. First of all, I'd like another expert who is actually hosting tonight, which is Tobin Dommer. He's actually the FinTech guy at Shepherd Mellon. And if anyone wants to speak to him after the event, maybe you could leave some cards at the table.
I'll be around. Thanks, everybody.
Great. Thanks, Tobin. And so now I'm going to pass it over to our international jet set journalist, French Phil Jody. He's actually a friend of mine. I've known him for many years here in the Valley, and he's welcome tonight to moderate the event.
Thank you. French American.
French American,
since May
sorry.
last, this year.
So, congratulations.
Thank you very much. So, when Pimo asked me to moderate, I was part of the people which she was asking. I did a little bit of research, and I saw one of the meetup she organized, tokenize the asset. I said, if we can come to tokenize the assets, what are we capable to do? It's absolutely fantastic. I don't know how it's possible to tokenize the asset. Anyways, just a few questions for to be more comfortable with the audience who knows nothing about crypto market. I was about to raise the hand because I'm supposed to do it. And who has bought Bitcoins or something else? Who has bought some cryptocurrencies? Good. And next question, who has invested in a startup working on this field? Ooh, nice. Very well. So I'm happy to introduce you to the panel. And I'll start with Robin, because trying to be a gentleman, it's not so, as a French person, I don't know, sometimes English are much better for that. Robin, so you're VP Product Marketing at BitGo. So would you mind to tell us your involvement in this company? Just to introduce yourself, please.
Sure. So as the first person to speak on the panel, so I am VP Product Marketing at BitGo, and I've had a long career in financial services, mostly focused on market data and building trading platforms, and came to BitGo about 1.5 years ago. And BitGo is focused on serving the institutional investor market, so it seems sort of like a natural step from the traditional financial services market. And so at BitGo, I'm basically bridging the gap between marketing and product and how we can best communicate our value proposition to the institutional market.
Great, and I like to always put some news. So I was reading that your platform was adding new stable coins and so on. Any news about BitGo that you can mention?
So we try to offer a variety of coins and tokens, mostly because we feel that our customers want to hold a basket of different investments so that they can hedge the market and minimize risk. So among those 100 coins and tokens, we support 5 different stable coins that we recently released, Circle and Gemini and Paxos and 2 others that I'm missing. But it's just a way of kind of filling out the market and offering the largest blend of coins and tokens.
All right. So you have 2 colors here, bull or bear. Take one. It's okay. No one is listening. That's all right. Voila, keep it. It's a gift. So by alphabetic order, because I want to follow some rules. Jamie, Securitize, co-founder. Can you explain us what Securitize is about?
Yeah, sure. So essentially, we provide a platform to do primary issuance of digital securities, which are usually represented in a token. And those digital securities need to be traded on a whole variety of different exchanges and marketplaces, and so we provide a compliance layer, essentially, for those trades to happen.
And you have some news, I heard.
Oh, yeah.
Yeah,
thank you. We just closed our Series A financing $12.75 million led by Blockchain Capital. And other investors included Xpring, otherwise known as Ripple, Coinbase, Global Brains, NXDP, and OKCoin. And
Good.
EOS in the next hour or so. That one hasn't been announced.
Color.
I'm a bear.
All right. I like that. Diversity. It's crucial. So, Matthew.
Okay.
So, but I don't know. You have which way you want to do. You have so many hats. So,
Thank you. So I'm a portfolio person, which means I have a variety of interests. I help run the world's largest angel group, which is also the most active early stage venture investor in America. And we have a family of funds, one of which is a blockchain fund of funds. And then with my wife, we have our own vehicle, the office, if you will, and we also are FinTech investors and invest in a range of emerging technologies. So my wife chairs the advisory board for Blockchain Capital, and we're in all of their funds. Through our blockchain fund of funds, we're LPs in Pantera, Future Perfect, Castle Island, Blonde Tower, IDEO, a couple in Europe, Fabric, and IKX. And then we're investors and advisors of Bitwise, and also do some direct investing into the space. And then across all the portfolio companies of our investors, we want to be value-added investors. So just for full disclosure, Securitize is backed by Blockchain Capital, so my goal is to help securitize as much as possible tonight.
I'll take that.
Sure.
and any news within the portfolio, or I don't know.
I think it went through quite a bit. We have our final closing on our blockchain fund to fund coming up, and so we're trying to get organized around that. But for us, it's always a busy time, end of year. Many investors are trying to make a few last minute decisions before the end of the year.
Good. So, Matthew, excuse me.
Well, I'm actually both.
You can take.
I am. I'm
You
bullish on the space and I'm bearish on the prices and market.
Great. Fantastic.
Hence the portfolio.
Oh, that
Miko.
too. That too. Diversification.
So the last time, I was doing my homework and checking the video, and so Timo was asking you to introduce yourself, and you were speaking about a cake. So which layer do you want to talk about? You remember that?
I don't remember the cake.
Layers. I'll send you the link on your own video, but it's fine. So can you introduce yourself, please?
Sure. My name is Miko. I'm a co-founder with an exchange called Evercoin. It is a wallet-based exchange, so it gives the user custody over their crypto assets. We do have some pretty interesting things. We just, I guess, news-wise, we just added USDC, so stablecoins. We do have some really interesting tricks that involve things like limit orders in-app, and so anyhow, it's a mobile wallet. That's Evercoin. I'm also investing out of a fund called Gumi Cryptos, which is a Japan domiciled USD denominated crypto investment fund. And I guess what I would say, if you put the 2019 timeframe, then I think I'm one of these bull bears, one of these really interesting hybrid animals. But we continue to deploy capital out of the fund because we're not market timing or day trading type guys. We're more like we're kind of fishing for the bottom, and doing a little dollar cost averaging. So
Okay, so
we're continuing to deploy capital and portfolio wise. So yes.
Cool. We'll give you both.
Okay, great.
All right. Thank you.
We ended up being an
It's good. There's balance. It's balance.
I used to be in the country.
Balance is good. So usually, Merle introduce myself. It's okay. I just feel Pimo did the job, so it doesn't matter. I'm gonna now continue. I was working this weekend, just to finally to do a very interesting conversation. I hope you will enjoy it. And I just found this quote from Bill Gates. The future of money is digital currency. I mean, what does he know? Because I know the story of, I have a lot of respect. Microsoft is such an amazing story, but when you know about the how he did it, it's. And sometimes, with due respect, I'm just a small guy, But when I see Bill Gates, I feel like I see a kid, still he didn't grow up, and it's so rich and smart, compared to. But who can say something about what does Bill Gates is Matthew? Just finish.
Well, first, what year was that quote? Do you know what year that quote was?
Very good question. It's no. Right now I can't tell.
I think 2 years ago.
Yes. So I think we've known for at least 20 years that you couldn't have a global digital economy without native digital ways to transact.
Mm-hmm.
And what we have today is a global digital economy that is really a communication platform and is built on communication protocols. So I actually don't think Bill Gates is in the minority. I think most leaders who really understand the internet that we have and the digital economy we seek to have know that the missing element is actually digital cash, native digital cash. And what we have today is a thin veneer. You think you buy something from Amazon, but what you actually do is you send a message, and then all the transaction activity goes off the internet. And we just don't really appreciate and understand that. So actually Milton Friedman in 1999 said, the only thing that's missing from the internet is native e-cash. And I think he's correct.
Nice. Maybe you can keep the mic because I want to everyone to help me to define the landscape. I mean, speaking, in 2019, cryptocurrencies, the trend, what are we talking about? And so maybe you can start and go through the way you see the market, how you describe the market of cryptocurrencies. What is that? What are we talking about?
Okay.
1,500 currencies, how many investors? What's the...
Okay, well, so I'm going to pass it down because obviously you guys
Sure.
Have very distinctive points of view on this. But for me at least, I think you have to unbundle the blockchain protocol,
Mm-hmm.
the crypto assets that are built on the protocol, and then the tokenization of assets, which is coming fast, and ICOs was a proof of concept around that. And if you unbundled it that way, the blockchain protocol is about distributed open ledgers, and the companies that are building on that myself and Miko are backing, of which these two are examples, are definitely beginning to get some traction. The crypto assets became extremely fluffy, 2,000 or more, half of them already abandoned. And it's very unclear to me how many crypto assets we'll end up needing in terms of protocols and currencies. And then the ICO phenomena is simply the first example of truly technology-enabled crowdfunding, and that, without question, is the future. Just as it makes no sense to have a digital economy without digital cash, it doesn't make any sense to have a digital world without digitization of the assets that make up that world. So both those things are definitely happening. But please, Robin.
So I don't have any information to add to that to further quantify it, but I would just point to the institutional investors that are coming into the market, which to me shows the growth of the market. And I think I think we're going to see that in 2019. I feel like I'm going to repeat a conversation I was just having with you, so excuse me for that. But I mean, we do see, Goldman Sachs actually, they just invested in Bitco recently, and they also are going to be launching a product to the institutional investor market. There was certainly an example. We have Fidelity out there in the market that shows that they're going to be launching in the first quarter, and we'll see, how they stand to serve the market. But to me, points to growth. We have ICE with their backed exchange coming to market. They did delay until January, but again, another point of growth for the market. I think the only naysayer of recent was State Street, who recently said, I think yesterday or something, that that they didn't hear any demand from their institutional investors, and so they were not planning on bringing a product to the market. Standard Chartered. Another bank that's also looking at crypto and custody. So to me, there's so many different players, and we just got done with Thanksgiving a week ago, and when family asks you, oh my gosh, I hear all the terrible things about Bitcoin, and I always just point to these maybe not household names, but certainly big names in the industry that point to the strength of cryptocurrency. So I wear the bull market.
Jimmy, the market. describe the market.
Yeah, I mean, look, I think that
We'll come to more details after the factors and stuff, just to
Yeah.
describe what we're talking about.
I think the most important signal from our point of view is regulators coming out and saying how they want things done, not to not do them. And so that's a really important shift, whereas, this time last year, we weren't really sure what the regulations were. We now understand more or less what the regulations are they want and what regulators are looking for, and they're not actively looking to block and kill these things anymore. They're looking for them to be done in a certain way. So I think, as Matthew said, this first phase of ICOs really showed the power of real crowdfunding that's done in a way that is very agile and very lithe. I think that the whole next iteration needs to get to that point. We're very, very early in that process, and it's going to take a better part of 18, 24 months to come up with a market that has as much demand and is as liquid as we saw in the crypto bubble, which burst recently and continues to deflate. But we're going to see it really happen, I think, with assets. And people don't realize how much bigger assets are going to be. I mean, real assets on chain are going to be, people quote multi-trillion dollars. It'll take time to get there, but there's a lot of stuff out there that people are going to want to buy, and access to global capital is pretty unique. I mean, today I had a customer come and say, "Oh, we want to do this bond on, as a token, right, as a security. We're going to sell it globally." We've never been able to do that. We've had demand always from the whole world, but we've never been able to do that. And so those types of financial products, in the U.S., I think are like $4 trillion in bonds or something. It's gigantic. So it's going to be an interesting time, and this market will end up being much, much bigger. The other piece that I know this maybe makes my bear case, but as a student of economics, things getting more expensive per transaction the more you use them is a really shitty platform, right? So like the more I pay, the more I use Amazon, it doesn't get more expensive to use per transaction, which isn't true of Ethereum and many of the other platforms. So I think that's something that we need to improve.
Miko, just still the market, 1,500 crypto.
Yeah, so I would reiterate your taxonomy. So it's very similar, which is, the way I would look at it is I think the language would be different. So for me, I like to say that they're asset-backed, right? So the asset-backed, I think, are largely people refer to them as security tokens. I tend to shy away from that framing because I think it conflates the regulatory lens from the non-regulatory lens, right? So for example, if you look at it from the SEC perspective, everything's a security token. So so that phrase suddenly loses all of its meaning, in the United States, where we all live. So, bearing that in mind, then, I like to really think about asset-backed, and then the other component I like to think to juxtapose against that is the service-backed, right? And so, to me, I tend to look at it that way, which divorces it from the regulatory language, right? Now, oftentimes people will call the service-backed tokens so-called utility tokens. They'll call them that, right? But really, I think of them as asset and service-backed. Now, it gets a little weird, obviously, but I think that's a reasonable taxonomy. And then, I think what you were calling base protocols, I think I call them sort of everything and nothing backed, right? The Bitcoin is everything and nothing backed, right? And the reason why I like to think of my taxonomy as complete is because service-backed tokens are backed by verbs, and assets are nouns. So basically, if it's a verb, then it's a service, and if it's a noun, then it's a, and if it's everything and nothing, then that's an infrastructure coin. So what I mean by everything and nothing is that Bitcoin is technically not backed by an asset or a service, but if you offered me 10,000 Bitcoins, I would deliver you 2 pizzas. So for sure I would deliver those to you. So the point, so that in some sense they're backed by everything, and in another sense they're backed by nothing. But I mean, I think it makes them into a unique class that's distinct from being, so-called asset-backed or service-backed. So anyhow, I know that's a little intellectual, but I just wanted to set the frame of, that, and then to comment on what's inside those boxes. To me, clearly there is, this pendular swing. People are talking about the emergence of the asset-backed so-called security token. The pendular swing is kind of away from the so-called service-backed tokens. Just to kind of make the bull case, I do think that there in 2019 will have a handful. There will be lift coming from the service-backed token space, right? There will be specific examples of service-backed or so-called utility tokens that will be kind of steadily increasing in value based on economic activity that allows people to set a price target. So I think that's what I think on that side. And then I think obviously the other side will be, gangbusters. Like if you look at the total size of like all the crypto assets in the world, you could just go up to the Santa Cruz Mountains and look down at a, city like San Jose and imagine how much real estate there is. And every single dot is a house worth $1 million. Let's put it that way. So, it's a lot. So I do believe asset-backed tokens will represent a lot of economic value.
Perfect. With your permission, what I would like, in fact, is to, we're talking bull or bear 2019, and I'd like to, you guys mentioned sometimes some aspect of it. I'd like to go to each factors. I was trying to do my homework, as I said, and to think about what is the biggest factor that can really influence the crypto market in a way or in another, okay? So you're welcome to, there's a second mic if you want, maybe it takes less time. I'll put it to you, Robin. So I was just putting some lists, I don't know, I hope you like it. Taxation, is it a big factor to influence the crypto market for next year? Taxation.
One of the trends, so I moderate a group called Advanced Crypto Asset Trading on Facebook. It's an 8,500 person group, but Bill Tai pointed out of the group that actually one of the neat things that may be happening is basically year-end tax loss harvesting, right? So, if that is the case, then that may actually relate to the balance of what happens, 30 days later when you're able to kind of like move back into the asset. So I don't know. I don't know if it's true or not, but I thought it was interesting. We had a nice discussion. I thought he's a smart guy, so.
Who wants to take the mic on taxation? No? Let me help you, Matt. You were speaking about governance. Protect the people from themselves. I had some good quotes from some of you, so it's another aspect, because right now it's from a country to another.
Well, so I think the challenge that governments and regulators have today is that they've seen the rapid emergence of a body of economic activity, people, players, and they are required to apply the rules that they have until they have new rules. And that's always a challenge. So back in the mid-90s, we saw that here in Silicon Valley where the internet was taking off and there were questions such as, should we have sales tax online? It was a big issue, and we didn't know the answer to that. And for regulators, first and foremost, in the absence of any direction, the answer should be yes. It's economic activity, sales are occurring, they should be taxed. Well, the US decided not to tax the internet, and for a while we didn't have sales tax online, and then eventually that began to change as we understood the space better. So in this time, so you asked the question of tax. I think the more fundamental question that governments around the world and regulators around the world are trying to get to grips with is there really a there? What of this is real and for the long haul and which is just noise and fluff? And what activities are beneficial and value creating for economies and countries and citizens, and which of this is just speculative or scam oriented or noise? And I think until they get to grips with that, this specific question of how to tax the events that are occurring in space is really a hard thing to get to. So I think 2019 is a period when we're going to continue to flush out the reality and the, if you will, the beef, the sizzle. And I think we're going to discover that a lot of the projects that were funded, a lot of the teams that received funding end up not making it through the year. A few really high quality companies will pull ahead, and then we'll look at them and say they're here for the long haul. And then some of the protocols will fail this year and some will not. So I think this 2019 for me is a year of shakeout. And I think the specific issue of tax I don't think the regulators have enough information to know what the right answers are this year, so they'll have to apply their old rules, at least in the interim.
I just wanted to mention that at the Consensus Invest Show last week in New York, I must have spoken to, I'd say 4 or 5 different tax firms that were just trying, I think they were more on a research endeavor to try to learn more, to talk to different people at the event, to understand their needs for taxation, and I think that they're just chomping at the bit to see the opportunity in the cryptocurrency space. So, they're coming, right? They see a lot of opportunity.
Yeah, I mean, I think also in the asset space, it's almost even exponentially more complicated because you're dealing with assets in different countries. So what happens when somebody in Thailand buys a piece of the St. Regis Hotel, which is in a private REIT in the United States? How do you tax that? What do they tax it on? What's the basis? What do they get the credits based on the tax structure that they created?
I think they learned, the government learned, they gave us the example of how they know how to manage tax, especially European. If you don't mind to keep the...
Can I just build one last
Please,
thought?
please.
I don't think any of us, and we should have probably said some things at the outset, we're not giving investment advice, we're not giving tax advice, and individuals watching this need to make their own decisions, all those types of things. But having said that, if you were an individual listening to the answers to that question, I think, and I for one, I'm going to, this year in 2019, I'm going to assume everything is a taxable event. And unfortunately, everything is probably a current period taxable event unless I can demonstrate those capital gains. In the dot-com boom, many of our friends went bankrupt because they got options. The options went up in value. They couldn't afford to pay the taxes when the options collapsed. And that is happening to my friends right now in this space. They receive large token grants. The token grants have a large perceived value. There's a tax calculation associated with it, and some of those are going to go out of business and be worth nothing, but you still owe the tax. So I think you have to be very careful and thoughtful about preparing for that tax scenario, and that actually is one of the reasons why there should be constant selling by all of the players in the space to make sure you have your fiat currency for your taxes, because obviously if you were blessed with a lot of BitGo and BitGo failed, you may still have a taxable event ahead of you.
A bit more. Matt, just to give you back the mic if you don't mind, because you were mentioning one aspect I'd like to come back to is the institutional money will be the catalyst of the influence of bear or bull next year. Can you were mentioning you're an economist, right? Or you've been working on that?
Oh, that's I studied economics. Yeah, so what we've seen is large institutions are trying to get their heads around what these assets mean. And I think one of the problems in this space has been the branding and the positioning of it. So the concept of a token is a really uncomfortable thing, whereas the concept of a digital security is actually a very comfortable thing. In fact, over time, digital securities are actually accepted. There's case law in the US around it. It's a normal thing. Because of Hurricane Sandy, all the paper records were actually flooded, and so they had to support digital records of them. Now, from my point of view, having a digital record on a decentralized network where everybody can see it is better than having on a database in one place, particularly for security. But that was kind of the basis of my comment is institutions need to get comfortable with it. Companies like BitGo are starting to move into a space where they'll hold these digital securities, which is new. It's a different asset class than the ones they've been used to. And so once you have kind of regulated, insured custodians of digital assets, then these larger institutions can invest, because right now they can't even really invest in this. There's an amazing podcast around how blockchain capital secures their investments. For a while, they don't do this anymore. But there's a podcast about Brad Stevens talking about how he would buy treasures and wrap them in wrapping and then cover them in glitter, glue to make sure that they hadn't been tampered with, so nobody had stolen it. So the market's evolved a lot.
Robin, I just thought of you about one of the factors I was reading about some predictions for next year. Only added value cryptos will do well. What is an added value crypto?
Yes.
Added value crypto.
I mean, to start, but
That's
Was there a quote?
No, I don't have anything about value-added crypto. Does anybody, do you
Well,
want to define
I
that?
do in the sense that.
I thought you could. Sorry.
Well, he's gonna frame it for me. Frame it for me, Matthew, and then
It's
I'll.
always better for me.
Well, I guess the view would be that, you know, all emerging technologies are unproven until they create true value for some end users. And in certain settings, which might be against known needs, but they're doing it in a better, faster, cheaper way, or it could be about serving unmet needs that maybe the consumer knows about or maybe doesn't even know about. And so I think the question ahead of us in 2019 would be, what are the largest possible needs that these crypto assets can actually solve? And I guess the quote is saying the winners will be those that find a need and meet it well in a differentiated way, faster, cheaper, better than the existing approaches. And I would always agree with that quote. It's sort of a cliche. The winners meet the end users' needs better than others, and people that fail to find the best way of solving an end user problem. But I don't know, so that's my framing.
Well, then it makes me think of an interesting use case, and perhaps this is answering the question, or maybe not a little bit. But I was listening to a podcast this morning on a particular cryptocurrency, and perhaps it was even a token that was solving a need for storage. And I thought that was an interesting use case. And as the podcast explained, the person on the podcast explained, was that right now, all our data is stored by Google, Facebook, Microsoft, whoever the big players are, in a Dropbox, right? I'm sorry?
He said Marriott.
I said Marriott.
Marriott, okay. Maybe them too. And we know the problem with that, right? I mean, it's exposed to risk, it's exposed to hacks, it's exposed to all this information could then be using artificial intelligence, using machine learning, can then have a lot of data on you, and we're all concerned about that, especially with things that we've been hearing about Facebook, and it just seems a huge concern. So here the solution was that this particular way of solving storage was going to allow it to be decentralized, so that all your data was stored on multiple large servers, and so that information could not be pieced together to provide the story about you. Anyway, I thought that was and you hear so many of these, but just one that I happened to be listening to this morning that I thought, okay, there's a use case that I think that it is a legitimate use case that I think is something worth solving.
So that sounds a lot like BitTorrent, right? Like that's basically what BitTorrent was. It was like, you got videos and files and everything out there, which in a lot of ways what we're seeing again is a reinvention of it. And I think that's actually a really interesting case study to look at the economics of that product in particular, because on BitTorrent, which was basically a way to steal music, Napster, Wares, all these things were all the same, right? Yeah. So people were really comfortable with sharing all this data with other people, but the way you got more power in that network was by seeding or sharing more content. So the more content you had to share on the faster pipe you had to share it, then the more you could download, which there's actually quite a few crypto projects that follow the same kind of thesis, which is kind of interesting.
Yeah, I just was reading a bit the story. It's like there's a Bitcoin for a use case. That's quite funny. Very interesting. Bitcoin upside kept. Ripple becomes the new Bitcoin. What can we say about that, Miko?
What can I say about Ripple? So the thing that's interesting about what's happening in the market with pricing is not that I care that much about pricing, but what you're seeing is like the flippening between Ether and Ripple, right? So Ripple is like ascendant, right? And Ripple is Jamie's investor, and I'm friends with some of those guys. But my mindset is I'm really not anti. Like I feel like there's a lot of purists out there that are really anti, and they're kind of waving the flag of decentralization. And to me, like in a way, I think people. The early adopter phase of like hyper crypto libertarianism, crypto utopianism, maximalism, and this kind of model or mindset of disruption, right, is in some ways kind of becoming much more pragmatic, right? So to me, like My mindset is more open source money. So, if I think about that mindset, it's about really initially replacing mostly financial software packages with open source software packages. So like, why wouldn't something like Swift be replaceable? And if it's semi-centralized or completely centralized, like, that's fine. Like, it's just different. So, from my perspective, Ripple is, they're all experiments actually. Just very, very big experiments, but they're all experiments.
Yeah, please.
I build on that a little bit, but also continuing the thread. All of this is software. There is a hardware component too, but it's primarily software. And so there are choices developers have about the functionality they place in their software. And I don't think that we're ever going to get a singular token that does everything. So there's going to be some differentiation about which use cases each token is built to support and solve. So if we take something like Bitcoin, Bitcoin actually has a pretty broad, software capability set built into it around identity and trust. But the use cases that it seems to be best positioned for right now is store of value. And then you mentioned Ripple. Ripple actually has a different set of capabilities built into XRP, and their primary use case, at least in this first go around, is transfer of value payments, especially international payments. Those are both very big use cases, but it's not an either or, you actually need both. And going out even further, I talked about how you couldn't have a digital economy without a native digital cash or cashes. I know that there'll be government-backed versions of those. There would have to be, the e-dollar, the e-krona, the e-yuan. I expect those to come. The question for me is how many sovereignless, non-government-backed e-monies will there end up being? And I don't know that there's going to be more than a handful. So just continuing that thread, what we've seen in the past is niche-focused technologies in the early phase. So whether we're talking about mainframe operating systems, search engine wars, all of these begin with a few, then they become many, and then they collapse back again to a few. And I think for the next couple of years, we're going to see a lot more niche definitions of tokens, and then the functionality of the best will get rolled into the biggest and the leaders, and will collapse back to a few. So I think 2019, it is about have some unique value added, demonstrate you can make something valuable happen within the world, but the war for preeminence is way ahead of us. It's 3 and 5 and 10 years ahead of us, and I don't know that will play out in 2019.
And so somehow the implementation of the blockchain by companies and so on can also have an impact on the next year, health of the crypto market. Matt.
So I'm probably talking
whoever wants to take the mic, I'm trying to balance.
That we've seen before. So when the internet came out, we had the internet and we had intranets. And company intranets were more narrowly defined around the players and what was allowed and permissible. And for a while, they made a lot of sense. We talked about walled gardens. And then the internet ramped up, became faster, cheaper, more capable. And slowly the intranets found that they didn't make sense. And so today the companies are all in the cloud. Many things now are leveraged from the external environment. And corporate intranets are definitely much more limited. They still play a role. That's sort of what's going on here too. So we have truly open, distributed, public blockchains. And then we have private, tightly managed, tightly focused, things like IBM building a hyper platform that will support corporate implementations. So I think that how that all plays out is probably one day that the need for narrowly defined use cases gets blown away by these more capable, multi-dimensional protocols, but that's 5 and 10 years away.
Software failure. I think there might be some crypto next year. Maybe Ripple will disappear next year because of the software issue or something. No? No one interested?
Well, I will. Sorry. You know,
I don't know.
the Bitcoin Cash fork should be deeply troubling to all of us, because two warring parties threatened to crash each other, which is exactly the opposite of what we believed blockchain and the distributed world was about. And in fact, when Bitcoin Cash SV said we'll have more than 51% of the mining power, and therefore we will define consensus and we will turn off Bitcoin ABC. That vernacular, which was in the press and was seemed to be coming from some critical key players, is, I think, deeply troubling. Software crashes can occur from the outside, but when communities within threaten them on the very infrastructure and technology they're trying to build for the world, I think that's deeply worrying. So I know Jamie wants to say something here.
No, I mean, I think it's ironic that we spend all this time decentralizing something and then it's controlled by two parties, and at the end of the day, they're making the decisions around something that they invented, which is totally artificial to begin with. So, you know, for me, I would be happier in a world, even when I first saw that happen, I guess beginning of last year when Bitcoin Cash appeared, it was sort of obtuse to me. I'm like, why would this happen? It's just pulling value out of Bitcoin, which makes little to no sense. So, I mean, from my point of view, I'd love to see both of those projects fall on their face and never exist anymore. It's probably not going to happen, but I think we'll definitely see one of them disappear.
The impact of ICOs, it's bringing some kind of a strange, who wants to comment about that?
Well, I mean, I'm grateful for ICOs. I don't know, we wouldn't be in this business if ICOs hadn't happened, right? So what I think, and Matthew pointed this out earlier, what everybody saw was this global demand from a very broad investment community looking for a new way to invest in projects and to buy into new things, right? Which is fascinating. What we didn't see was the greatest level of controls around it, and so there was a lot of speculation, which was alluded to earlier. So I think, you know, I invested in a few early ICOs, and I've done some research on. I think the number one thing to do with an ICO was just to sell it immediately as soon as it came out, because that was the only time you'd have a profit on it. I imagine there's some exceptions to that, but you know, like Ethereum or something like that. But you know, at the end of the day, ICOs have created a new market and a new way of capital formation on a global basis, and we don't understand the impact of that yet. We'll probably look back on this in 10 years' time, like Matthew's doing now about the internet, and say, oh my God, you remember when that was like a new thing that just came along? So I think that revision, that looking back, would be really interesting to mention.
Building on that, you know, if you go back to what we did with public equities, starting maybe 50 years ago, but certainly through the Big Bang in the 1980s and 90s, where we took trading off the marketplace and onto computers, we enabled a bunch of stuff. So in practice, your security, which is your stock certificate in a public equity, actually is all digital. You no longer get a share certificate sent to your home. The trading is all electronically. It's highly, you know, the units are highly fragmented at a very small scale, and there's massive liquidity. And all of that made them very efficient marketplaces. But you go to something else, we talked about real estate, or what I tend to do, which is investing in early stage tech companies. It's still all paper-based. It's extremely slow, it's very expensive, and there's no real liquidity because of the challenges that come about from not having technology applied to the space. And it turns out that these are massive markets. The US real estate market is larger than the US public equities market, and no one knows what the value of private equities in America is. We don't know, but it's probably huge because there's 27 million small businesses, all with value. So the notion of the tokenization of all of that stuff, and then the building of marketplaces to provide liquidity and ease of purchasing and selling on all of that stuff is a really big thought. And I think Securitize is right in the middle of it right now.
Nice. Miko?
Yeah, I mean, I there's a. I guess I'll just talk. Yeah. So you know, in a way, the ICO phenomenon was this kind of mass
expansion, and there's a lot of experimentation going on. The question becomes, whether there's real learning, right? And I think some of the lessons are pretty hard-won lessons, and the question becomes how the community digests those lessons, right? Because I feel like there are lessons on two sides of the coin. One of them being asset allocation, right? So there's some people who really got overexposed to the asset class, and in a way, they people pejoratively refer to those people as so-called weak hands, right? Which is that they have to sell low. They bought high and now they have to sell low, and they have to sell low because otherwise they can't pay the rent, right? So that's that. Hopefully, lessons learned from that. And people not getting stuck in that. But I think the other side of it is really asset management, right? And so the thing that I saw happening in the ICO phenomenon is a large number of folks, effectively trying to do what has frequently been seen as a profession, right? Which is venture capital, right? So venture capitalists spend their entire professional lives doing diligences and doing, investments, and so people who are not professionals kind of radically entering into this space all of a sudden and expecting to get the same kinds of returns, I think it was probably also not necessarily a thing. Hopefully though, the thing that's, hopefully the community can digest and get the right lessons, right? Because to me, right now I see a lot of teachers teaching completely ridiculous lessons. Like I see people out on Twitter and the blogosphere and people writing, I saw an article this morning, Bitcoin is in a death spiral and it's going to zero. So people are learning the wrong lessons, and so hopefully they'll learn the right lessons, right? And to me, it could be that there will be some subset of these people that will actually come back in and behave in more rational ways and actually do a better job, and that will actually ultimately culminate in a much more financially inclusive and decentralized marketplace that is turning out to be somewhat self-regulatory, ideally. So, but that will take time. I think right now what's going to happen is we're going to be fighting the ghost of the bear, right? Which is everyone's going to remember being burned, and so every time the price comes up, they're gonna see it as a selling opportunity, right? Because they're just going to be scared. So we're going to fight that for a while. He said 10 years.
Miko, you want to say something? It's nice, friendship, I like that. So you talked about mass adoption. Because you were speaking about community, I heard you speaking about mass adoption can have an influence also what people we realize that's
mass adoption. I mean, to me, the thing that is exciting about this is, so I feel like, I'm really thinking, you were talking about how there may end up being only like 3 or 4 of these things. If you look at internet companies, if you look at the FANG companies, Facebook, Amazon, Microsoft, Google, there aren't that many of those, right? They're each worth $1 trillion or thereabouts, but they're made up of like thousands and thousands of acquisitions and other smaller companies. So each one reflects, a whole world of assets, right? So in a sense, saying there won't be that many of them doesn't mean that investing in a small one won't turn out well. They can all be consolidated into these bigger ones. But in terms of mass adoption, people are saying all kinds of like scary things about something like Telegram, but they have a lot of users. Right? Telegram has a lot of users. Maybe they already spent all the money on Lambos. Like, we don't know, but maybe they didn't. Right? And maybe they're going to deploy a product that's meaningful. If they do, that's going to be like potentially hundreds of millions of wallets, of which we don't have. Like we don't have hundreds of millions of wallets, so it'd be nice to have. So I guess what I'm saying is mass adoption may come in increments that may surprise people. So, and obviously all these things do take years. So I don't know about 2019, but I do believe that mass adoption will surprise you.
democratization of investing. Maybe to stay on that's one of your words. If you want to.
Sure. So I think if we look through, so if you use those two phrases, mass adoption and democratization, as being somewhat similar, there's obviously the adoption and democratization of the products and services that blockchain may make better, cheaper, faster. But then there's also the opportunity to invest for gain in this stack and the companies and the projects that are being created. And we could talk about either of those, but I'm just going to take the investor hat for a moment. So most asset categories around the world do not have mass adoption and they're not democratized. So even something like public equities, which probably has the broadest reach, because whether we're direct investors or not, and it's easy to be because you can go to a Schwab or a Fidelity and easily buy something and sell something. Even if you're not a direct investor, pension funds, the social security system, your insurance company are buying public equities on your behalf. So we all have a stake in that story. The same is sort of true for fixed income. As soon as you go into private categories, the adoption is de minimis. So for early stage technology, which is probably the highest returning asset category in the world, there's, of the 12.5 million households that are accredited in America, 97% of them have no direct investing in early stage tech. We only have about 300,000 angels. We only have 5,000 or 6,000 VCGPs. So it's very, very underpenetrated. And real estate is probably similar. I mean, we all may own homes, so we have a little, well, no, many of us do not own a home. In fact, probably most Americans don't own a home, but for many rich Americans, you'll own your home. But then you may not have a second direct investment in real estate, and it's not that easy to go down that path because the minimums tend to be high. So I do think that this great promise of tokenization is to bring the bite sizes down, make the liquidity per unit much higher, and give every American and every person around the world the opportunity to participate in this if they wish. And then we have these old rules: accreditization, general solicitation, unitary banking, Glass-Steagall. These were created in the 1920s for a very specific reason: to protect Americans from bad actors and bad practices. And until we know that this new space is free of bad actors and bad practices, I personally think we will continue to need to protect the people in the space. And I've used this analogy before, but I'll say it again. The Wild Wild West sounds very attractive until you're the guy shot outside the saloon. And I think people are beginning to see that. And by the way, that's going to happen a lot in 2019. A lot of people who moved quick, bought tokens, are going to realize that they're going to be confronted by 100% capital loss for the first time in their lives. We as angel investors know that happens 60-70% of the time. I think a lot of crypto token investors haven't experienced 100% capital loss on everything they invested. And I think at the end of 2019, we'll have a lot of people who have gone through that for the first time. So mass adoption, it will happen, but caveat emptor, democratization, societally, should we really enable that fast? I don't think so. I think we should do that in a disciplined way where we understand the benefits, but also the risks before we create a very massively bankrupt class in America.
Probably the most hated thing in American regulation is the threshold of accreditation. One of the things most people don't think about with that is it's not a forever problem. So it's a problem that for a private security goes away after a year, and then you can have retail investors in it, which most people don't realize. And so it's probably a good thing to have a 1-year cooling off period on any investment. And not being able to sell it for a year is probably a good thing because it helps kind of sort the wheat from the chaff and find real projects. So, if you had invested in ICOs in December 2017 and now we're sitting December 2018 and you hadn't been able to sell anything, the real projects would have had a lot more traction, and the projects that obviously weren't real would have evaporated. And maybe not everybody's money would be gone as quickly, so we probably would have seen different behaviors.
Just before I hope that Pimo will come before I can go through the Facebook questions. So what I'd like to conclude, to have perspectives of your company, Robin and Jamie, for next year. And for you guys, investments, you're kind of the $1 million Matt, if you remember. I've been checking this video on the email in London, as you noticed. So let's conclude on that. So first of all, Robin, to speak about BitGo for next year, or what it's going to be.
Yeah, I think for next year, what we see for BitGo is there's going to be more of a slow and steady uptake of customers. Even through the last several months, as we're seeing the market kind of soften a bit, we're still continuing to see institutional investors come into the market. Initially, those institutional investors were the hedge funds, and we know a lot of the hedge funds are not performing well, and many of them are closing. However, that's not to say that new hedge funds won't start now with a new set of portfolios that may be more successful in the coming year. I think it's just the ones that exist now, they are coming some troubled times. So I think that if we see a lot of those institutional investors come into the market, I think that's going to fare well for BitGo. And I think while they might be a little bit slow to come in the first quarter, I think that we will see them. So we're going to buckle down and make sure that we continue to provide a secure service, because BitGo is all about providing security and also compliance. So that we're going to, we have the custody service for a qualified custodian, so we'll make sure that we are ahead of the game on the regulatory compliance. Should the SEC rule that that's the way cryptocurrency should be protected. And it's just getting our ducks in a row for what might come and kind of staying ahead of things.
Securitize 2019.
Yeah, so we kind of look in kind of 6-month windows. The first half of this year was really about figuring out how to do primary issuance very well. The second half of the year was about integrating with exchanges and really doing issuances. So we have about 4 billion tokens, I think, on chain now. The first half of 2016 is going to be primarily around kind of scaling trading and seeing lots of new exchanges come online. And I think we'll start to see some liquidity towards the end of 2019. So I wouldn't expect that the security token market overall will be very liquid until probably the end of 2019. We'll start to see it switch on because we'll have real scale around it. So that's kind of what we see now, and we just see a lot of new markets waking up. It wasn't 3 months ago where nobody in China was interested in talking to you around digital security. Now it's literally one of the top topics. We have Chinese investors who've showed up, which we were in Hong Kong 3 months ago, nobody wanted to talk to us. So the market's shifting very, very fast.
Okay, Miko, investment, and then Matthew.
Yeah, if you all have read The Hard Thing About Hard Things, which is Ben Horowitz's book, it's an excellent book, and he talks about peacetime CEO, wartime CEO. So I think in a way, that's the mood. My fund continues to deploy capital, so we're definitely doing this. But we're also looking at, obviously we're price sensitive, and we're looking for people who have, the good instincts. From our perspective, we call, there's a phenomenon that I like to call heaven and earth, and I like to see both, which is, I think the early ICO was featured a whole lot of heaven. It was like white papers full of heavenly visions of fantasies. To us, we don't actually want anyone to show up without heaven, but we also want them to show up with earth, right? And heaven and earth, earth is really gonna be gritty, and we really want to see people who can talk about things like cash flow break even, because if you can give us that, then you have infinite runway, and it doesn't matter then if this is winter, nuclear winter, or ice age, right? So if you have infinite runway, you're good, and it makes you a great investment. So that's what we like. But if you can create infinite runway for yourself, and you don't actually have a vision of heaven, and you don't want to get to a heaven, then you're just a lifestyle business, and you're not a venture business. So heaven and earth, that's what we're looking for.
And for my part, you already intimated that I'm on the Singularity faculty, and we had a working session, a thought session in London. You can find it on YouTube. If you were to Google something like YouTube, Singularity, London, blockchain, Matthew, you might find it. But it was.
I did, so you can do it.
Yes, but and I think that we were trying to talk through the same topic as a group. However, some thoughts that I have as I think about my investing strategy for 2019 in this space. In terms of the blockchain stack and the companies, I do believe in the future of many of those companies and technologies, but I think the rules of normal early stage tech investing apply. So you've got to have access to the best deals, you need your co-investors to be the best that you can possibly find. You're going to see massive failure rates, so you have to be highly diversified, and you have to help those companies get through their early ramp-up stage in order to have any chance of success. So if you don't have that access, you don't have those skills, then I question whether you should play. But if you can find access, including through vehicles like fund of funds, then that might be a good thing. Underneath that, there's another horizontal, which is the people selling the picks and shovels to the miners. And that's all these companies building the infrastructure, the exchanges, the wallets, the Coinbases, the securitizers of the world. They may not even be blockchain companies, but they're building out a lot of what the blockchain community is going to need. And I'm a big believer in those, but the same rules apply. In terms of the top tier of the crypto tokens, the top 20 or 30, even in that lofty space, there are abandoned protocols that appear to have high value, but no engineers are working on them. And there are projects where most of the community doesn't know why they're in the top 20, but they are. But so I'm a bit sketchy and confused about those, but I would go through a vehicle. I have a vested interest. I'm an investor and an advisor to Bitwise, but I like the notion of an index or a basket or an ETF if we had them for that. For the long chain of tokens, it's definitely caveat emptor. There's two strategies. One is pump and dump, and the other is take a long-term view. Pump and dump, you'd have to be a much cleverer investor to play that game than I am. And I think most of us would be the dumb money in the room, so we'd be taken advantage of. And the other strategy, which is long-term investment in long-tail crypto token opportunities, I think the same rules of early-stage investing apply. The failure rate's going to be massively high. You need to be co-investing with the best investors in that space. You need to be highly diversified, and you've got to help your token projects get ahead of the curve, which means you have to be a value-added investor. And if you have all those skills, then by all means play the game, but it's a lot of work. So that's my view. And then for 2019, we're going to see a lot of failure. We're going to see the end of a lot of projects, but chugging along through that will be the real teams, the real projects, and the real technology change that's coming. And by the end of it, we'll have a digital economy with native digital currency, native digital assets, and a lot will change for all of us to the better.
That's a word I'm used to. Inshallah. It's
Very nice.
So I made this script and preparation thanks to the video that Pimo has on the YouTube channel that I encourage you to check again, because you have an interview Miko, Matt, Jamie is on it. Now Robin, you're part of the team. And so it's very interesting. So don't hesitate to go and check. And Pimo, you have the final word as the host.
Thanks so much, Phil, and thanks so much to the panel. Really appreciate that you've come to contribute tonight. We've got a 3-minute pitch, and I was wondering if you guys wouldn't mind just moving to the audience for 3 minutes. And Jan is going to introduce